Get Rich Slow with John Wolf. Hey, I promised that I would show you the income slash cash flow slash how much you would make if you bought my fourplex and then sold it in like 10 or whatever years. And here it is. Here's the math. Let's go through it. It's pretty darn exciting. Anyways, so I just, it's calculator.net, rental property calculator. And I had to modify a few things because it doesn't have a setting for FHA, so I'll go over that with you really quick. But okay, my purchase price of record was $768,000, and the down payment was 3.5%. Then the interest rate, you see here, I'm putting in 4.170. I thought you paid 3.25%, and I did, but FHA mortgage insurance for a loan amount this big is actually 1.05%. Now, it's not charged the way that interest is. It's actually once a year and amortized, and it does actually go down with the loan amount just like the interest rate does, but the interest rate is actually amortized once a month. That makes a little bit of a math difference, but basically you can take the FHA interest rate and then just add the FHA mortgage insurance and fool a calculator that doesn't have a mortgage insurance section into giving you almost exactly the right number. If you go down a little bit here, I have the closing cost at $8,000. Now, funny thing, that's about what the real closing cost was, but this calculator is going to factor in the 3.5%, but there's nowhere for me to subtract the $5,000 to $6,000 that I got back after closing, which I talked to you about in the last video. And also, I told you in the last video, the seller paid all the closing costs. So why do I have this closing cost number here? Well, the reason I have it here is because for the first year, I'm going to be living in one of those units. So I'm just sort of making the math work for the about $1,000 a month loss that I have on the property itself while I'm occupying one of those units and can't rent it. Anyways, the property tax, $5,800 a month. I have the calculator set up to increase that 3% a year, which is probably about right. The homeowner's insurance for a fourplex is actually, I was actually kind of shocked. I'm only paying $740 a month. Have that set up to increase. I have $1,000 a year set up for maintenance, and I have that set to increase by 3% a year just to build with inflation. And so far, I want to let you know how I'm doing. So far, I've replaced a water heater. That was about $400. I replaced a wall electric heater unit. That was about $200. And I had to actually replace a sink faucet of all things. And that was, I think like it was like $90. I don't know. It wasn't very expensive. So we're doing well there. So I'm definitely saving money in that box over time to do, the real major maintenance. It has a brand new roof anyways. I have $2,000 as the other expenses, and that is, water, electricity, that sort of stuff. The monthly rent. So as soon as I rent that unit, which I'm actually fixing the unit up right now to rent, I should be making something like $5,060 a month on the rent of all 4 units. So this is sort of in the graph above where it shows year 1. That's kind of year 2. I kind of summarized year 1 in the beginning costs. So anyways, that's going to go up 3% a year. I'm going to assume a 5% vacancy rate. It's not going to be, all the units aren't going to be full every month. So it's going to sort of handicap the yearly income. And 6% management fee. So I'm managing this all myself, but my time's worth money. So I'm putting a 6% management fee in there. Some of the things that go into the math if I'm going to sell this is the increase in value. I'm just going to put 3% in there. If we follow, the 30-year rolling average for the state of Oregon, I believe is like 6.5. And fourplexes appreciate a little bit less anyways. But and Portland, and this is right outside of Portland, that rolling average is something insane over 10%. But 3% appreciation value per year, very conservative number. And for this first run of the math, I'm going to hold it for 10 years. It's really 11 years because I told you how I tricked the math there. And I'm going to assume it's going to cost me 6% of the home's value to sell it, which is a pretty reasonable assumption. So let's just go look at here. So year one, I'm basically losing $1,000 a month, but I'm kind of skipping year one. Year one on the chart, but really year two, my cash flow positive for the whole year is going to be about $1,400. Not a lot, but it's not a negative number. And then just rent increases over time. You see that number doubles the next year, gets up to $4,000 the third year. And then when we're talking year 9, really year 10, I'll be making $13,000 just cash flow off of it with all of these assumptions. And if I'm selling it, and this really is selling it, year 10 math is kind of correct, I would have made a total of about $426,000 in 10 years off of an initial investment of about $23,000 initial, and then losing $1,000 a month for the first year. So really about $34,000. That's right. $34,000 and some work today, easily net $400,000 with very conservative assumptions in 10 years. Now, you can do well in the stock market, but you cannot reliably do well in the stock market. So just getting up to the top of this calculator, I want to show you when you're talking to real investors and they're trying to brag on each other, you're talking about the internal rate of return. So that's kind of like, how much money is my money making every year? And the internal rate of return for this would be 33%. Now, good growth stock mutual fund kind of things, they average 7-8%, not 33. This is really good. And the total cash on cash return over the 10 years is 1,224%. You're probably not going to get that on your stock pick in 10 years, unless you're really, really good at that game. But that is a much, much higher risk game. And then let's just go over here really quick and talk about the first year income and expenses. And again, this is really year 2 because I tricked the graph. So anyways, we got here $5,000 a month income. Mortgage payment is basically with all the pieces of the mortgage payment is $4,400. The maintenance cost I have in there is basically $83 a month. It's actually been a little bit less than that. So far, so good. Although I'm improving a unit to turn it over. So if I put that math in, then that wouldn't be the case. And the other cost is basically my management that I'm paying myself. So $166 a month. And, the cash flow year 2 coming up is going to be, $112 a month, plus the $166, which I'm also paying myself. So now I want to let's just look at where we would be if we held this for 20 years. Well, 320. I'm not going to live that long. It would get boring. All right. So if we held it for 20 years, then by the time we sold it, our total gain would be $1.25 million. And again, this is on that initial tiny investment that we were talking about. And because it's a longer period of time, the internal rate of return gets worse, but the total cash on cash return, almost 3,600%. Wow. Now I'm just going to set this number at 31 years because that way actually, I think I have to do 32 years. One of the last couple of years will show us how much we're going to be netting after the mortgage is paid off in a little while. So that would be we would be netting cash flow $108,000 a year in year 31. So that would actually be $2,050. That's amazing. And that's with such little cash in to get this whole thing started. That's what's amazing about owning real estate and doing investment real estate. And by the way, we were talking about fourplexes, but if I were to just buy 3 or 4 single family units, live there 1 year, rent it, buy another one, live there 1 year, rent it, buy another one, probably 5% down every time, the net math would basically be the same, except for the fact that the appreciation value would be a lot higher, but the rent math would basically be the same over a long period of time with multiple units stacked up. That's what just so amazing over this math. But anyways, I hope you loved this video. Smash that like button, subscribe, please. And if you need a home loan in Oregon or Washington, refinance, anything like that, I hope you reach out to me. Have an awesome day. Bye.